All right, guys, welcome back for another video. It's certainly been a red day in Bitcoin, all risk on assets in general. Today, we saw another blow up of a major lending company in Bitcoin, the Celsius network. If you guys are familiar with that, it's essentially a platform where people can, use their Bitcoin as collateral and get paid a yield on that. Well, apparently they've blown up, liquidated their Bitcoin holdings on FTX, and we've seen a major plunge. We're watching it actually in live time right now. And, despite how it seems like the world's burning, everything's on fire, Bitcoin selling off, even Bitcoin dominance going down today. I do want to take this, use this video as an opportunity to put a little bit of perspective on the market and kind of balance out some of those bearish feelings with kind of historical areas we see in the price chart. So, in order to do that, I need to bring up this 200 weekly moving average. It's a 200 simple moving average, but essentially you can see how it caught the bottoms really well. So it caught the 2018 bottom, the March 2020 bottom, and we're testing it right now. Again, no guarantee. Price could certainly go lower, but that is an area to be aware of. It also caught the August 2015 level right here. Another thing worth mentioning is that RSI is currently at levels that it just has never been at, and if it has been at it, it hasn't closed at these levels ever, because it's at the 26th level. I mean, it's way down there. So essentially, what that's telling you is that the market is very, very, very sold off at this point. So it's just a different way to put things in perspective. There's been some pretty aggressive selling right now. No reason to stand in front of the train on that. But from a fundamental perspective, Bitcoin, maybe not the best time to be opening major short positions at this region. From a supply perspective, Bitcoin, its price to supply ratio, or price to stock to flow, also referred as the stock to flow deflection, is it actually broke its all-time low today, meaning that from a fundamental perspective, Bitcoin is more undervalued than it's ever been. And on a risk-adjusted return, would be a better buying opportunity than it's been at any time in its history, which may sound hard to believe. I do realize that people are not huge fans of stock to flow at a time in the market like this. But, this is the phase in the market where, a lot of the speculators leave, a lot of the, short-term minded people leave, and the capital that remains, or even the capital that flows in at these times, they're more long-term minded. They've got the big picture in view, and they're probably going to be the type of people that take the Bitcoin and buy it, send it to cold storage for years, throw away the key. Of course, not actually throw away the key, but you know leave it in cold storage for long term, further contributing to the amount of coins in cold storage and the liquid supply in the market, and also reducing the balances on exchanges. Now, it is important to mention that when price action like this happens, exchanges are doing great. Volume peaks on exchanges like Coinbase and FTX and Binance to the downside, and these guys just make a shitload of money when price goes down like this. So they're fine. They're doing fine despite what anybody tells you. But it is interesting to see, especially to keep an eye on like what the spot markets are doing, because really this downward price action is typically driven by futures and derivatives trading. So keeping an eye on the spot market is if you start to see the spot market diverge from the futures and the derivatives market, it may tell you that some of those longer term minded investors are stepping into the market, setting in the floor, and ultimately bidding price up. Now, does that mean price goes to the moon? Well, of course not. But if price is going to base off this level, even here where it creates a V-shaped recovery, it's still a few weeks, as opposed to here where you get a few months roughly. But essentially, Oh, one thing I do want to mention in today's video is talk about Wyckoff accumulation and distribution. So anytime you see this pattern right here, you have a higher high on the coming down off a sustained downtrend. Break below the 200 exponential here, and coming off this type of sustained downtrend like this, you get price entering a narrow range. Price breaks up, forms a higher high, runs down, forms a lower low, comes up. There's your lower high. So you can mark this off sort of like this: higher high, lower low, lower high. And then this can either be a higher low or a lower low. And in this case, it was a higher low, but it's the two different versions of the way accumulation plays out. So essentially, if that were to play out here, and again, it actually doesn't look like that's playing out here. It looks like price is just running for the downside. But hypothetically, if it were to play out, essentially what would we see? Well, we would probably see price run up to this level, maybe offer a reaction off that level, and then ultimately run up to this low right here, set in some type of higher low around that low, around this area right here, and then move sideways, ultimately in a sideways type of motion, moving over towards whatever low is set in this area. And again, there's no, really, with the current price action that's happening now, there's really no way to frame that type of entry based off price action, because really price is just, falling straight down right now. So there's really no basis to form that, right? If we were going to play a move to the upside, what we want to see first is ultimately some type of base formed, some type of reaction off some notable level. And now, speaking of notable levels, are we officially testing the all-time high? Not quite, but I know this is a very popular level, and whether it's the all-time high of 2017, or the brief consolidation at that level, it does look like we're getting pretty damn close there. And any more of a push from this level, we're not there yet. But if just one leg down, if it's a couple $100 away, I would interpret that as an ultimate test. And maybe we get that. It's hard to say at this point. Personally, I thought that I just saw so many people talking about this level on Twitter. I just found it hard to believe that that level would actually get played. I expected it to get front ran a little bit, but sometimes people get what they want, and but it's a rare event. Typically, if everybody's looking at the same level, it either gets front ran or ran through pretty dramatically. So I just don't know what the odds of a perfect test and then a bounce are off that level. Anyway, it's a very difficult area to frame a trade, right? The kind of the underlying parameters that would lead to a short squeeze are pretty damn high. So it's very difficult to justify any type of heavy risk on any position. I think this is more of a accumulation paradise, right? Maybe you have an accumulation model, you buy X amount of Bitcoin every so often, more of a long-term minded opportunity. Well, this, believe it or not, is actually the type of area where, not only do you see generally, some more long-term plays, but in the context of the time frame, they tend to happen pretty relatively quickly. Here, you did get a little retest there, but then you got your leg up. Now, of course, people, when these areas get hit, people will say, well, this time's different. It's not going to play out that way. But again, uh, when price makes lows like this, yeah, there are people getting liquidated, people getting stopped out, but there are also people on the sidelines. Major capital on the sidelines who is looking at this as a unique opportunity, considering where the macro levels are, and they may see that as an opportunity to step into the market. Uh, you know, take a good position. I don't know if you all are familiar with Michael Saylor and his Bitcoin position, but I believe he has a cost basis of 30,000, roughly, maybe a little over 30,000. And right now, Bitcoin's basically trading at the previous all-time high and at 20,000. So, you know, it's a unique opportunity where some investors who maybe, they had to listen to Michael Saylor take victory laps for the last year or so, uh, and they were watching Bitcoin price run on them and just kicking themselves for not getting in. Well, now they have an opportunity to get in at a significantly better cost basis than both Michael Saylor and Elon Musk. I think Tesla's cost basis was 31,000. That's at least according to their public filings. But you know that, and for guys of that size, that is important. They're comparing with each other, so the opportunity to one up one another is never lost on that crowd. Anyway, I hope you guys like this video. If you guys like this content, please just make sure to like the video, subscribe to the channel, and I'll catch you guys in the next upload.